Okay, so I'm Bill Sahlman. I've been a member of the faculty for a very long time. Had a mere 5,000 students, so it's wonderful to have some of them back and to see new friends. Our job today is to talk about the intersection really of the venture capital and growth equity business. That's what we have represented, and then Jane Mendillo can talk a little bit more about the context in which all of that operates, because I think that's an interesting question too. I'm going to get each of our panelists to introduce themselves, describe a little bit about their career path and what they're doing. I'd love to talk about what's going on in those markets, and then I think we can cover any topic you would like. There are some fascinating questions about underrepresentation of women in entrepreneurship, in venture capital, in private equity. And there are lots of new data about that, and happy to go there and talk about that, or to explore any area you would like. So Jane Brock-Wilson, why don't you start us off?
I would be pleased. Thank you. Hello, everybody. Let's see, how did I get in this arena? So I've been at Berkshire Partners, a private equity firm, for 22 years. But I started my
You might pull the microphone over a little.
I'm actually right here.
Oh.
So can you hear me okay? Or I grew up in Indiana. I went to Purdue University, spent my first 3 years in manufacturing. Always thought I'd go back into manufacturing. Came to Harvard, very green, very naive, probably the only person ever not to read any of the cases for the first day, because who has homework on the first day of class? I've never heard of such a thing, and I luckily didn't get called on the first day. And then I sort of said to myself, well, everybody's talking about consulting, investment banking. I know nothing about it. Maybe I'll just do that for the summer so I understand what people are talking about. And went to Bain & Company, fell in love with it, loved the people I was working with, and so was there for nearly a decade, and was a partner there before and how I met Jane, actually, and several people in this room. And then I met my future career. I met people at a wedding, believe it or not, and someone said, you're the person for us for the 90s. So 22 years ago, I switched into private equity, not really knowing as much as most people know about it today, because it was very much in its infancy, and so have been there 22 years. And
Berkshire's what size
so
fund?
Our current fund is $4.5 billion. We have in total about $11 billion, small compared to the Harvard endowment, but sort of upper middle market or small, large.
Everything is small compared
to the Harvard endowment, which is great, which is a good thing. So that's a very good thing. So it's so I've done a few different things and always thought, as I said, I'd be in manufacturing, and have loved private equity for the last 22 years.
Great. So Jane is a Yale MBA and took over the Harvard endowment in 2008. Describe a little bit about what you do and how you got there.
Okay. Hi, everybody. Thanks for inviting me. I am the interloper. I went Yale, no Harvard until I got married to someone who went to Harvard, and now I have a child who goes to Harvard, so I guess I'm allowed.
Not because you manage the money. You're not allowed for that reason.
Right.
That was the real thinking.
Right. Actually, a really interesting point. I graduated from Yale College and the Yale School of Management, and I went to work at Bain & Company in Boston. And here in this room, we have 3 generations, so to speak, of Bain people. Jane Brock-Wilson was a manager when I was there as a consultant, and one of the very few women managers at Bain. And one of the people that we all looked at and said, how does she do that? So here she is today, 22 years later after entering private equity, and just still a very wise counselor to a lot of us.
Old, that means old is what she said.
Yeah. Claudia Palmer, who's sitting up in the back, was an AC when I was a consultant on my case team. So it's really, I know a lot of you are having this experience over the last couple of days, but it's really marvelous to see people 10, 20, and more years later and what they're doing in life. And Claudia's living in London and big music industry guru, and so she's been a huge success too. But my experience at Bain was not quite as happy as Jane Brock Wilson's. She was a role model. I was wondering what I was doing there the entire time. And I really found out that I had another interest and passion, and that was the investment world. And so through serendipity, I ended up in 1987 coming to the Harvard Management Company as an equities analyst. I covered steel and insurance because nobody else on the team wanted to cover steel or insurance. And I had a great time doing that, and I moved from there from public equities into private equity, eventually into other alternative asset classes, including natural resources and some of our big exciting deals in timberland in the late 90s. And then became the vice president of external management at Harvard Management, which meant that I was managing about a third of the endowment, mainly in alternative assets, about $7 billion. And I left in 2002, not because I didn't like the job or the place at all. I loved it, but I had the opportunity to be the first chief investment officer and build the investment office at Wellesley College, which only had about $1.5 billion. But similar to Ann Moore, and I wish I were similar to Ann Moore in a lot of other ways, but similar to Ann Moore, it wasn't the highest paying or the most exciting or prestigious job offer that I'd had in recent years, but it was the one that fit most naturally with what I wanted to do. And I went to Wellesley and had that experience of building my own team, working with the goals of the college and the administration, making the portfolio what it needed to be, and then coming back to Harvard 5 years later, where I've been since 2008. I had the good fortune of coming back at the peak of the endowment value, July 1st, 2008.
Wow.
The day I joined was the height. We'll get back there someday, but we're still working on it. And it's been a very exciting 5 years, much more interesting, challenging, different than what I expected it to be, but I am delighted to be there and happy to talk about what we're doing with the endowment. It's the largest college and university endowment in the world, over $30 billion. We manage it in a unique way, and I don't want to take too much time, but I'll talk about that afterward. And private equity and venture capital is a huge and important part of what we do, so I'm happy to be part of this panel.
Yeah, and it would be great to try to get a sense of how the shift on internal, external, how do you think about that as we get into it? Lisa?
Thank you. Good morning. So I started my career off as a chemical engineer at Procter & Gamble and quickly discovered that I didn't want to work in a plant and I didn't want to work in a lab, and I wish I'd known that before I left Cornell so I could have minored in wine at the hotel school, but I missed that opportunity. So I ended up working in their consumer products and health and beauty area, and specifically prestige fragrance and cosmetics, and I worked on all of the integration of the acquisitions they had, both domestically and abroad, and launched a lot of products for Max Factor and CoverGirl. And then I got recruited to a startup in New York with some veterans from L'Oreal and Revlon, to launch a line of products for the softer side of Sears when Sears decided they wanted to do more than just tools. And we successfully launched 600 products in under 10 months, and I decided I'd earned a vacation. So I took 2 weeks off, and I went and I got married. And on the way back from our honeymoon, yeah, we were dating. On the way back, prior to that.
Pretty compressed period there, but.
And so on the way back, I realized I had some kind of affliction because the idea of going back and maintaining with one brand really was not appealing. So I came back and I did some research and discovered this venture capital thing, and I didn't know what it was. My grandmother to this day thinks I'm a bank teller, but that's neither here nor there. And I also discovered that at that time, I think 40% of all VCs were HBS grads. So I applied, I got in, and I turned to my newly minted husband and said, hey, you want to come along? He goes, sure, why not? And fortunately, he didn't require the GMAT, so he applied, got in, we came together, and HBS was very generous. They gave us 2 for the price of 2. But I had my own consulting company working
they were
with
a force of nature, those two.
They were.
something like that. So I had my own consumer products consulting company, which allowed us to come here comfortably. And as I was coming to the end of my time here at HBS and trying to figure out what offer to take, I spent a lot of time with Bill, actually a lot of time with Jane and other senior women in the industry, and I did the only logical, linear decision for someone with a cosmetic background. I went into early stage healthcare technology. And I joined a startup venture firm out of Princeton through the Kauffman Fellows Program. And I was a general partner there for over a decade, focused on devices, healthcare IT, and services. And then I decided I wanted more. And so I'm currently investing and working with a broader range of companies. I sit on a whole range of nonprofit boards that I'm very passionate about. I live in Princeton with 3 boys, my 9-year-old, my 11-year-old, and my 43-year-old. And I must say, don't tell Mike I said that. No, he's fabulous. And I have to say one of my most successful deals, as well as for my firm, was a referral from Professor Myra Hart. So the HBS Women's Network is quite strong.
And Cornell.
It was Athena and Cornell, that's right, where I'm a trustee. So that's my story and I'm sticking to it.
Cammie.
I'm Cammie Samuels, and I'm incredibly humbled to follow this group of women in Ann Mora's amazing talk this morning. And I also am humbled to be before you, having gotten 3 hours of sleep last night. My flight from San Francisco came in late. So I grew up in New York City. I'm going to start from the very beginning too, and was a science geek, and originally thought I was going to go get a PhD in molecular biology, and discovered as I got higher and higher, or more advanced in science classes at Duke, that I was a really social being, and hanging out in the lab all day didn't work for me. And so I almost switched into econ, which is the closest to business we had as a major at Duke. And yet the school wanted so badly to have women be science majors. So I stuck with the major, and then went into management consulting. And again, thought I was leaving the science, and then discovered biotech as the business of science, and arrived at HBS dead set on being a biotech CEO. In fact, it's kind of ironic that I went into venture capital, because I felt at the time I was the only person our year not in the venture capital club, didn't take the venture capital class, any of those things. In retrospect, I did take entrepreneurial finance and running and growing the small business. You can squint in retrospect and see me head in this direction, but you couldn't see it prospectively. And ended up joining a biotech company that had been financed by my now mentor, a guy named Sam Colella, who's a venture capitalist, and joined my firm 2 years out of business school. And have been with Versant 13 years now. We've got $1.6 billion under management. Our emphasis is early stage healthcare. And originally I stuck with biotech exclusively. I've actually, and we should talk about this, developed an emphasis on consumer health as well as time went on. And a year ago, went to part-time. I have a 5-year-old on the autism spectrum, and he is my biggest emphasis at the moment, but that's I presume, a temporary decision, and a very hard one. Being at events like this makes me realize how much I miss constantly being at events like this. So, and with that, so I still have my existing boards, not making new investments at the moment.
So one interesting question is, so Jane, we had a conference for venture capitalists. We had the head of CalPERS, who announced to the assembled crowd that he was cutting the allocation to venture capital back from 8% to 1%, and it wasn't clear it wasn't really zero. So that caused a few ripples through the room. That seemed like a big cut. So can you what's the future of venture capital? And then we can talk a little bit about other alternative asset classes.
Mm-hmm. You're talking Jane Mendillo here, right?
You, Jane.
Okay. We're
Non-happy experience at Bain, Jane.
as I will be known.
Great way to be caught.
Right, as I will be known from now on. The venture capital portion of our portfolio is actually a very important part of the portfolio and has added a lot of value over 20 or 30 years. You can have a decade in venture capital that doesn't do much. And so as long-term investors, we have the advantage of looking at an asset class like venture capital and saying, okay, we can't time it, and we know there are going to be doldrums, but we also know that when sparks fly here, it's going to make a real difference. In fact, sparks have flown in the last year or so. We've had some tremendous experience in some of the recent IPOs that have done very well, that have been part of our portfolio. And then, of course, prior to that, there were several years that nothing much exciting happened in terms of realizations in the portfolio. But always underlying, if we spend, if I get to spend a day or a few days with some of the venture capital managers in our portfolio, it's a very exciting part of what we do and what we have going for us in the portfolio. This is where real growth happens. This is where real change happens, and extraordinary economic returns can come out of that. So our exposure to venture capital in this very large portfolio is on the smallish side. Our total exposure to private equity is between 15 and 20% of the portfolio. And within private equity, say 30% of that or so is venture capital, and the rest is more traditional private equity. Where if I had a smaller portfolio, I'd probably have a greater proportion in venture capital, but we're unwilling to create more room for venture capital just to move down the spectrum of what we might be able to get in that industry. So size does limit what we do in the area. Is it changing? Yes. Private equity and venture capital and all alternatives. Harvard was one of the early entrants to these areas in the 70s and 80s. There are many, many more players in institutional investment in venture capital and private equity and all alternatives now. That means that our very juicy returns and our ability to influence terms in the industry and that type of thing those areas are not as I guess productive for us today. We're a player in the industry.
By which you mean there are a small number of firms that have been disproportionately responsible. They have all the relative bargaining power.
Yeah. And we used to be the big gorilla in the industry, and today there are sovereign wealth funds, pension plans, who have a lot of money to put to work in these asset classes, and so we are a gorilla, but we're not the biggest gorilla out there.
Yeah. Interesting.
I would comment, the other hat I wear is I'm a trustee at Cornell, and I'm on their private equity investment committee. And I'd say that venture, unfortunately or fortunately, has been out of favor for quite some time. And as most of you know, the industry continues to shrink. And what we're observing or what we're executing is that there's definitely a tilt more towards private equity and those top tier firms that have shown and demonstrated that they can have the returns, which I think personally that you miss some of the up and coming ones, but I don't see that trend actually changing much, and those willing to take a chance on some of the smaller firms.
Maybe for Lisa and Cammie, you have this disparity between what I would call the social return to some of the activities venture capitalists engage in, the importance for the economy, high growth firms, innovation, challenging the status quo. In life sciences, it's gotten increasingly difficult. So you did well in Athena Health, which is an IT platform, started out as a baby birthing center and switched to IT. Cammie, you've been involved in lots of hardcore science-based businesses. Is that business dead?
That's a great question. So yeah, and my biggest return is saving the world from double chins. So it's melting fat.
That's our client.
So as much as I've done to try to help the world, that's my biggest return. I would say that as a venture capital investment, we do have to be conscious of the fact that the U.S. pharmaceutical business is a shrinking business. Right. It shrank for the first time last year. And so I think if we define our purview as a U.S. pharmaceuticals, then it actually shouldn't be a venture capital business. Venture capital is supposed to be pursuing growth industries. On the other hand, if you find niches within that huge industry that are growing, or, in my case, find new hypotheses like consumer health that are growing, then it's very valid to continue to invest in the area. But I think for folks who are doggedly pursuing sort of same old business model, that doesn't make any sense in the world.
So I will comment on devices and then healthcare IT. So I think from a device investment, it requires the VCs to be more disciplined. So versus just backing what's exciting and what's new, you really have to start with looking at what are the acquirers, and that's really your exit. What are they looking for, and where's their emphasis? And then that should, in some ways, inform your strategy. I think in terms of healthcare IT and consumer business, I think it is growing and the field is still wide open. I think healthcare only trails transportation in their use of technology. So the power of personalization, of remote care, of delivering things that before you had no access to, that opportunity is still very, very early.
And
lots
it's a
and lots
mere
of opportunities.
18% of gross domestic product.
That's exactly
so
right.
It's got some scale.
That's exactly right.
Jane Brock-Wilson, if Berkshire's an odd place.
Thank you very much.
But it's
a
a
nice
beautiful
thing
place.
to say.
So is Versant. It's okay.
Yeah. Odd place in the sense that it's not a big high-profile name. It has invested in things like railroads in New Zealand and some unusual companies. But it's got one of the greatest track records of any private equity firm around. So it's spectacular. What do you guys look for? What are the elements of successful investment for Berkshire?
Well, oddly enough, probably the most important successful investment we make is with the people we hire. Because in the end, investing is all about the people. And so it's a big portion of what we think about every day. I know that may not be what people are here to talk about, but it's a very important piece of what we're investing in. Sure. As we look at portfolio opportunities, we are very focused on growth-oriented companies. We're in much larger categories. Our companies that we're looking to invest in might have anywhere from, on the low side, $40 million in earnings, on the high side, obviously, well above $100 million in earnings, and we would be investing capital $300 to $500 million. When I started, a big investment for us was $10 million, so it's changed dramatically over the years. But so we're looking for good companies with good management teams that have a growth orientation, and it has ranged from the locomotive division of General Motors, which we negotiated for 2 years to buy the company because of all the union activity, to telecommunication towers around the world, to Carter's, baby clothes, Melissa and Doug toys for anyone who has grandkids or kids, they would know that.
Bare Minerals.
Bare Essentials, which is a cosmetics company in California. So it's been a wide range. We've never specialized. And seeing Cynthia Montgomery last night was fun because she interviewed me right after I started at Berkshire Partners in 1991 and was very focused on, can you be successful in the private equity industry without specializing? And it was very interesting because we had great debates amongst the partnership as to whether or not to survive. And then now, a long time ago, we need to specialize, and we chose not to do that, which is somewhat unconventional in the industry, and it worked very well for us.
Yeah, it's what's the human capital behind these firms? What really drives returns? Often, venture firms in particular say, oh, you have to have a PhD in biology and have to have started 6 companies. And the most successful venture capitalists often, in fact, came out of investment banking or some other.
Consumer products or
something. Yeah. Thank you for reminding me, Lisa, that I had screwed up. Feedback. Look, let's open it up because I think you all have lots of great questions. So, yes, Roz.
Hi, I'm Roz Kane from San Francisco, and I've been involved for the last several years here in a collaboration between the Harvard Business School and the Harvard School of Public Health. And mainly because of the Harvard School of Public Health, it's really all about distribution and how to get products out there. And one of the things we found is actually there's a lot of innovation going around the world. And so I'm very curious to know from all of you as to what you're seeing in a global perspective of ideas and innovations that are happening there that could perhaps translate either domestically in the U.S. or where there's growth opportunities in those other markets.
Great question.
To which we need an answer.
I'll jump in. So our portfolio is a very global portfolio, probably more so than any other, or certainly than the average endowment. We have a pretty big exposure to public equities in emerging markets, and we've done some private equity investing in emerging markets as well. For sure, there's economic growth potential there that exceeds what we're seeing in the U.S. and in Europe. We're careful not to get overly enthusiastic about economic growth itself, because economic growth and investment returns don't always go together. And sometimes we can get great investment returns in places that aren't growing at all, and we can get poor investment returns in places that are growing very rapidly. But one thing we notice and have spent quite a bit of time on is the cycle of goods around the world. And one of our areas of real interest is natural resources. We have a very good natural resources team. We have a number of direct investments in timberland and agricultural property around the world. And the flow of those goods from where they originate to where they go, and the logistics around that, the costs around that, the trading partnerships, it's more and more rapid and interesting, and even that area has significant investment return potential to it. So certainly is a very global world, and I think much more so, global arena that we invest in, and much more so than it was 10 or 20 years ago.
Roz, just one comment from Paul Farmer and Partners in Health, who over a very long period of time has discovered how to keep people healthier in very poor areas. You see some new consumer-facing health delivery companies that take some of the what they've learned in places like that and apply them here in the U.S. It's sort of completely restructuring what happened. So there are lots of great ideas out there that I think will be brought back to the U.S. Yes?
When I ask you a question, a bigger picture question with a different hat on, let's say I'm on the board of a church or school endowment with small amounts of money, so we can't afford specialists, consultants, and so on and so forth. But you in your private lives have such interests as well. And I'm the only one on that board who even would talk about a dirty word like alternative investments, much less venture capital private. And yet in the world as we all know it, which is for the next several years, slow growth at a minimum. The purpose of having an endowment is for rainy days, and rainy days are ahead, and so there's no protection with it, just to ordinary S&P index funds. So how would you at a dinner party with people on those kinds of boards talk about the long-term virtues to someone who's frightened about a small amount of money but has those terrible fiduciary responsibilities because they impact people's lives so acutely, and yet they don't understand the virtues of what you're doing? I ask this question obviously personally, but when I look at your bios, you have those kind of relationships in other parts of your life. So how do you address, let's say, the core need for what you are experts in for people who don't have the expertise or can't afford to hire it?
You're asking how to talk to your own board? Is that what you're asking? Versus
Yeah, but
how to get into alternative investments?
How to expand their minds so
Right.
that they understand that owning an index fund and stocks and bonds isn't going to give them the protection for the endowment that they need.
The key word I would probably use there is diversification. Being diversified across a variety of types of investments, from public equities to public bonds to private investments, is going to offer both growth and protection that wouldn't be available to someone who was just, or to an organization that was just sticking with the traditional public markets. It is difficult to implement given a very small portfolio. So I think there's a debate there as to at what point you can enter into real alternatives investing.
And that would definitely be
Yeah,
the watch
same.
out. Is
sure
I
I'd
think
go
Bill would have all the data, but it's very skewed in venture capital and in private equity, and you'd want to be in the successful funds.
Any fund you can get into, you shouldn't invest
You might. So, as a small endowment, that would be the dilemma. Right.
I would build on that by saying that occasionally in Silicon Valley, I've seen nonprofits get an angle in with VCs where they can put in small chunks of money alongside venture capitalists or in their funds. But generally, unless you're getting into an alternative investment through a connection, and even then, I'd make sure that connection really is making money. I'm not sure I'd go there.
Jane, Mendillo, let me ask you a question. Harvard, though it's a very large endowment, also is a very large place, over a $3 billion budget. In the Faculty of Arts and Sciences, the endowment distributions were 60+% of the budget. You're in a sense under a lot of pressure to produce returns. How do you think about returns over the next 10 years? How do you, just in a very broad way?
Yeah, we are under a lot of pressure to produce returns, and that overall to the whole university, the amount of the budget that's covered from distributions from the endowment is about 35% of the budget. But as Bill just said, in some parts of the university, it's 50 or 60 or 80% of their budget that comes from distributions from the endowment. So we worry about returns, we worry about volatility. And part of the reason we pursue this very broad, diversified portfolio is that we want to find those growth opportunities and extraordinary investment returns, but also try to keep things somewhat level with regard to the volatility that the university experiences those distributions. So, it's more challenging now, for sure. U.S. Treasury 10-year rates below 2%. Just a few years ago, they were 5%. And building off of that, an equity premium of 3 or 4, you were, supposedly going to get returns in high single digits from public equities, and then another 3 or 4% for illiquidity premium. We're in the teens for private equity. Things are looking beautiful. It's a different picture today. We're starting out with 2 in a pretty risky asset, being the U.S. Treasury, and we're adding on a premium to that, even if you assume those premiums have not changed. That only gets you, for the illiquid, growth-oriented assets, into the high single digits. So our emphasis is in trying to be nimble in markets, going where there might be less interest and less expertise, more inefficiency, with more of our capital, and having control over our capital so that we can move from place to place when we see those opportunities. It's a challenging time.
Can I ask a question of Jane? Do you mind, Bill? That solution of diversification, he didn't say yes, by the way. I thought that the
We're just
lessons
taking
of
over.
2008 were that diversification isn't
work.
quite the solution.
Yeah,
Correlations went to 1.
it didn't work, right.
Okay.
So I would say that that is a real lesson. I think that Harvard and a lot of other institutional and sophisticated investors assumed that this process of diversification was going to save them from disaster, and that the worst things could get, given historical correlations across asset classes and markets, the worst things could get would, maybe we'll be down 5, 6. Well, I started July 1. By September, we were down 15, and by December, we were down 30. This was beyond what anyone had modeled, beyond what anyone would thought would have happened between emerging markets, IFA markets, U.S. markets, venture capital, private equity, commodities, the whole bag. Does that mean that we changed the entire strategy? It was a very hopefully unique time, but a very unusual time in which correlations went to 1 fast, and then they stayed there for a while, and then they backed off of that very fast. So I think the lesson of 2008 is make sure you can get through a period like that but you can't necessarily construct a portfolio to avoid the slings and arrows of that very unusual set of circumstances.
Yeah, and diversification, I promise, will still pay. It just in one particular moment where the world was going to end one day.
Yeah.
Seemed like a bad day. But,
It was a bad day.
Jennifer.
I'm in the deal world in manufacturing, and I'm usually the only woman in a room of men. So I'd be interested to hear your perspective on what's the advantages and challenges of being a woman in that dynamic.
Sure, I'll start. When I was actually leaving HBS, a very senior woman told me, Lisa, you're going to get in, but when you get in, it's going to be lonely. And I had no idea what she was talking about until I realized that I could go for weeks and not see another woman in the boardroom or even walking through the door. So it requires to have a really strong network. But on the plus side, once I made partner, I had the control and the flexibility and the resources to have a family, to be engaged with my family. Before they were in school, I'd bring my kids with me on trips. But I also realize it's meritocracy, and all styles seem to work in the industry. There are some really good ones and some really bad ones, but ultimately it's about the results that you deliver. And from that perspective, I think it's an excellent career. But make no mistake about it, there aren't a lot of us, and it's getting worse as industry contracts. But I still think it's one of the...
Getting worse?
Yes.
Oh, yeah. Oh, yeah, definitely.
People aren't realizing, oh, the women are the ones who did things sensibly, those are the ones we have to keep.
I think some, but they're little families. They're tight-knit groups, and people hire and affiliate with people that they know or that look like them, and then I find that once some women, when they and men too, when they've accumulated enough bleep you money, they decide they don't want to do this anymore. They're going to go and put their resources elsewhere. So all sorts of complicated reasons why that's the case.
If I could add in, because there are pockets of opportunity, and I maybe am a little Pollyannish because I've been around so long to see it, but in our firm we have 3 women partners. We've got women along the way. Although there's never a board meeting I'm sitting in where there are more than me as a woman, but I never really honestly think about it. So I think it has a lot to do with the people that you surround yourself with. I was in manufacturing, and I could tell stories that would match anybody's from the 70s because it was very fierce. I would say in both my Bain experience and my private equity experience, it all gets down to the people that you're associating with. So in my case, my firm has been extremely supportive. I have 3 children. I've been a single mom I was married for 18 years. I've been a single mom for 15 years. And, I work with the greatest set of guys in the world who were my role models in being well-rounded, balanced people, interestingly enough. They really set the standard in our company that has made all the difference in the world in my life. So it's a little bit of the people that are in those meetings.
It's all about the people, for sure.
And Jennifer, just one last comment on that. So, like manufacturing in the deal world, science and finance overlapping, 1 out of 18, I'm often the only woman in the room. But I do think that there are advantages as well as disadvantages. People remember me. And I would say that, and there's so much talk about how Silicon Valley is so unfriendly to women and so on right now. But I would say that the approach that's helped me is kind of ignoring it. And I'm sure you're doing the same thing. And that's not to say that I shouldn't come to events like this and talk about the issue and so on. But day-to-day life, I've ignored it, and it's worked for me.
Karen.
I'll do a shameless pitch for a way to get more women into the private equity and the venture world. And one of the things we have at the SBA is we have $3 billion a year that we put into things called SBIC, Small Business Investment Companies. And they are mini private equity venture capital world. And one of the reasons that we do it is to fill gaps in the market. And guess where there's a gap? Manufacturing, by the way. Early stage equity. and women and minority-owned firms. One of the reasons when I came to the SBA, the $3 billion, which by the way doesn't cost taxpayers anything because these firms are successful and they pay back. So it's zero budget cost, but we were only using $600 million of the $3 billion because it was such a bureaucratic mess to get through the licensing process. So the word is, the shameless advertisement is, we actually fixed it. We brought in a guy from the venture community, fixed it, and the number of applicants from women and minorities are up like 40%. Here's the real part of the pitch. Because we put in a debenture, so you raise $50 million, we'll put in a $100 million debenture. All you have to do is pay us back. The cost right now is about 2% interest. The returns to the fund are increased by 300 to 600 basis points. So you can make a lot of money. And you only have to raise, these are small funds. So if there's folks in this room who are thinking about entering this field, this is a very good vehicle. It's been around since 1958, but has not been user-friendly. It is now user-friendly and highly focused on driving more women and minority, and also rural. And 60% of the venture capital goes to 3 states, right? Massachusetts, New York, California. And I'll tell you, there are a lot of great companies in Nashville and Iowa and Idaho, Wisconsin. So you can make a lot of money, and the returns are augmented.
One of the nice things about having Karen in that job is that she actually knows something. But then acted on it. I mean, it was a tremendous contribution. Erin.
So, I think what I struggle with, I've been at Vestar for 12 years, right at HBS. They have been, I'm the first and only woman still there in private equity. Been very good with me, they've worked with me. Sam would know, I have 2 sets of twins. So you can imagine the second time I went in to say I'm having twins again. The CEO was like, I can't even describe to you his response, but they have invested with me, have been great, but it's definitely on an individual basis, like a firm. But what I still struggle with is I've been there 12 years. We've had 48 analysts come through. There's only been 3 women out of the 48 that have come through. We recruit out of investment banks, which investment bank analyst class in the first year are getting close to 50-50. Consulting firms, which are the other recruiting avenue, close to 50-50. Why is the funnel not growing? And that's what I have some ideas how I think to improve the funnel, but I don't know if they're right. But that's what I find the lack is. I'm saying now the recruiting season is starting again for analysts hired in fall of 2014. It starts right now, which is crazy. And last week alone, I got 10 emails from males at investment banks saying, I would love to talk with you, hear about private equity. Not one email from a female. And that's what I struggle with is how do we improve that funnel? Because until you improve that funnel, we're not going to get the representation. And then it's an individual firm because there isn't a huge structure and these firms are small and they are clubs that investing in you is a personal decision for that firm. And how do we improve the funnel? So I'd love to hear your
we
idea.
struggle with the same problem, and to put a little bit of a definition around that, these kids work in a bank or in a consulting firm for 2 years. They come to a private equity firm for 2 years, and then they come to HBS or Stanford or wherever, and then
That's the one in Connecticut?
yeah. So the best avenue for getting post-MBAs is for those who have done the pre-MBA. And so hence why those of us who care about getting women in the industry care immensely about getting them in these early analyst jobs. And the crazy part about what she just said is that so kids that have been out of college, this is part of the problem, for not even 9 months, and for those of us who, I have a daughter in that age range, I can't even fathom that after 9 months, were recruiting for the fall of 14. So they barely got their feet on the ground in their current job. And so I think that's one of the problems. I think for all the reasons we've talked about, and Sheryl Sandberg in her book talks about, kind of standing tall and believing you can do it. A lot of times I think the young women haven't even grasped how good they are at what they're doing today, let alone thinking about the next thing. And I think in the consulting firms, they do an extraordinary job of keeping their best women there. And they focus on that much more than the investment banks do. And so we have lines into, it's where we hire as well. And I worked at Bain nearly 10 years and have a lot of relationships there. But they're not going to peel off often their best women, and we're looking for their best women. So we have struggled. We work with the business school on this, trying to figure out how we can help ourselves. We work with the consulting firms and the investment banks, but we have exactly the same issue. The funnel coming in is so disproportionately male. It's unbelievable. So I'll take any suggestions people have, because we've worked hard and are not. We have one young woman who happens to be one of my section mates' daughters working for us right now, which is fantastic. And but we don't have a large number of them in the analyst.
One more factor to what Jane said, Erin, is because we've spoken to Bain and whatnot, and the women that they're seeing at Bain anyway, who are the ones we would want, they're actually asking questions about work-life balance earlier now than, when I graduated from college, I don't remember even really thinking about work-life balance at all. But the women now are thinking about that, and for whatever reason, they're looking at private equity and they're saying, I don't want that. So they're not doing the lean-in thing that Jane's referencing. They're not even raising their hand.
I also feel like it's structurally what I think is this 9-month recruiting is huge. I think the other thing, my idea is, you have to get into the investment banks almost during their training programs, because you got to guide the women to go to LevFin, M&A. If they want to be experts, go into financial services and maybe healthcare. But consumer and retail, it's going to be tough to compete against the guy coming out of M&A, LevFin, who in his 9 months of experience has a little bit more exposure to the questions we're going to ask them. So I feel like that's an issue that I think that I struggle with in getting them into the right groups, and then it's just the problem of, the men call their buddies who are 2 years ahead of them that are sitting at Vestar saying, how do I interview? What questions should I ask? So they come in much, with an unfair advantage. They're much more smarter because they've got such a network that they can call upon to know how to successfully interview. And you see it, and it's trying to find a way to fix that. I feel like it's some of our problem, figuring a way to get with the banks in particular, and then also some of, they're not also asking the questions either, but it's very frustrating to me. So.
Maybe I ask a slightly different question for Lisa and Cammie, which is, I've always thought that venture capital business was the most interesting, most flexible business you could be in. Private equity has this characteristic that in the very large firms, it's an abusive workforce.
That doesn't help the selling right there. Still.
No. That's why I said she worked at an odd firm. And I meant that in the greatest possible compliment because of how they work and what they do. But venture capital is a great business to be in.
Yeah, so, and I will say that it hasn't been announced yet, but a classmate of ours from '98 is leaving a huge, well-known private equity firm. And for 10 years, I've been talking to him at 10 p.m. at night with him saying, I hate this frigging job. And he stayed only because his expectations of what enough money was went up and up and up. But but he's finally leaving, and he's just over the moon happy. Whereas, I adore my job and have loved it. Literally, when I joined Versant, it was a 2-year and out program, and I thought it was a means to an end to still be a CEO. And 2 days in, I was in love with my means to an end, and wanted to stay in venture the rest of my career. So it's just wonderful. And if I didn't have a particularly bumpy kid, totally compatible with having a family. I mean, hard, but compatible with having a family. And having said that, there's certain lessons that we all still have to follow. So I do think that there were times when I've treated my own partnership as if it was family, and you kind of take family for granted. And I would, buzz in, have 15,000 meetings, and buzz out without creating water cooler time and so on. And that's sort of not my nature. It was just the overwhelm of being the full-time working mom and so on. So I do think that, be you male or female, you also have to pay attention to making sure you don't treat your partners as if, actually, in my case, they're so close that you take them for granted.
I mean, as I mentioned, I loved VC, and it was more, and I still love it, and it was more than I thought it would be, and it was because, as I said, it was a meritocracy. And so when I joined my firm, having not had a healthcare background, my partners were pretty much like, okay, you gotta find a way. and they left me alone. And it was up to me to go and carve out my niche. So when I talk about the flexibility and the control and the schedule and, when you deliver, that's what they care about. But I also, my first day on the job, my partner took me to his daughter's soccer game. And so that set the culture for me. So I knew, but at the time I wasn't even sure I wanted children. So when mine came along, I could actually do both. I could do what I loved, but also have time for my family.
So my first day, in contrast, I hear my partner scream, he's just come back from vacation, F, and he didn't say F, I hate vacation. Because he was so overwhelmed having been gone for 2 weeks. So that notion of picking a place that where everybody embraces lifestyles is a good thing too.
Lisa, where is your son going to perform?
My 11-year-old is going to perform at Carnegie Hall on May 5th. Wow. He's an athlete and a pianist. So we feel very inadequate in his presence, but yes.
That's great.
Thank you. Thank you.
Yes.
We talked about women in venture capital, and I'd be interested to hear from you all about supporting women entrepreneurs who are looking for venture capital. I've had a couple of discussions here with classmates who say, what happens for women when they come into venture capital firms. The standards are so much higher, the criteria you have to meet are so much higher. And I wonder kind of what that dynamic is for you when you're in a investment meeting or a meeting like that, and if you feel any obligation or responsibility to not make an investment that you wouldn't make otherwise, but how do you encourage women to be entrepreneurial so that there are more women coming into your offices?
So I am a big supporter of not only women entrepreneurs, but also women in VC. So I will always take a call, particularly from young women who want to enter. There is a difference, and there is sometimes a different discussion around the table, but I also find that some of it is coaching the women. So, I hate to stereotype, and I can't believe I'm about to do this, but I do see it, where the man could come in and sell you the moon, and the woman comes in and gives you a very plotted, laid out plan. And you kind of want both. So there are unofficial and official ways of coaching. I'm involved with Springboard. I do other things, but I think you have to do it. And you have to make sure that the information is being communicated to your partners, in some cases translated to your partners so that they get it as well. But we've invested in my previous company in several, and I'm over 10 women businesses, which is unique within VC. So,
Jean, money management is not so different.
Right. We love to see women-owned firms and women-run firms come in. We just don't see them very often. It's a pretty rare event. And I will say for us, it's all about the returns. And I think Lisa said something about this earlier. One of the great things about our field is that it's a meritocracy. Track record gets you there. And if you're a woman or a male or a Martian, it's going to be what you did, what returns you generated that are really going to sell your fund or your approach or your investment strategy. So we, on this point about women in the funnel and how there are so few, one thing that we have also talked about, we do a fair amount of our portfolio is managed through internal management. So there's a trading floor of people buying and selling stocks and bonds and derivatives and futures, and we really struggle to find women in this area and have talked about whether we can, and we'll try and follow up on this, work with HBS in some way to encourage young women when they graduate from HBS to try or to angle toward that field, because it is still extremely male-dominated. And I imagine that when people go from a place like HBS to someplace on Wall Street, that they get to the trading desk and it's overwhelmingly male-dominated, and it's really difficult to find people who have experience in that kind of career, which we would love to see more of.
Karen?
So that's actually what I do. I'm a trader at a healthcare hedge fund.
Okay, good.
And we have, I think the place that I work is very particular and very special, and we were started by an amazing man about 16 years ago now or something. But he created a culture that was absolutely fabulous, very family-oriented, really great. But now, a couple years ago, we had a new guy take over, and you can see how that's shifting and changing. So it really does go back to the management of how these people are managed. Having said that, there's such an informal network that goes on within the trading world. Again, I'm just healthcare, so it's a very small world. There are 2 women traders in all of healthcare, basically. So when somebody calls, or I'm talking to somebody about a trade, they say, "Oh, well, she." I know exactly who it is. It's a problem. Yeah. I know what she's doing and how she's trading. So it's a really bad problem. But more importantly is, the way men and women communicate and the way they handle their time, or people handle their time, is so inbred in what they do that there's a network that's created that no matter how good I am, I'm not going to be invited to that, cigar bar night. That happens all the time. So you have to be able to create and become your own force without that network. But that puts us at such a huge disadvantage. I don't know how it is in the private equity world and how that whole thing works, but those meetings at the cigar bar are really important to be part of. And we try to change the conversation, and my partner and I go out, we're out way too much, but when we go out, we bring analysts with us. And sometimes even our own analysts at my firm will come with us, but we require an analyst from the brokers to come. So the conversation isn't just about the latest cars that are out there, but it's really about, okay, let's talk about the healthcare stocks. Let's talk about why Vertex is performing the way it is right now. Because if you can change the conversation slightly to an intelligent conversation, you become actually relevant to what's going on and what you're seeing. But it's amazing how often it doesn't happen. And the women that you see trading on Wall Street don't get that joke. And the problem is also is that there are a lot of women now that are retiring, and they're not being replaced by any new fresh blood. But I have to say, if I was a young woman knowing what I know now, I don't think I'd go back into this business.
If I could do one thought, but you have to be in the business long enough for this kind of networking to work. And Pat, you'd be a good example of someone who's been in the area for 25 years or so. But I think women do network differently. And I think that has great advantages. So I have never, as a mother of 3, I don't have time to play golf and do the evening things. And as a single mom, that no as a full sentence has been very important in my life, because I can't be doing nighttime things. I'm home for dinner with my children. And, but I think if you are really meticulous about recording your relationships, so to speak, of your contacts and your database. And, I was, Lisa, when we saw her on the panel, I said, I know I've talked to Lisa. And it was back in 1998. But so keeping a good record and then following up with people and knowing the personal side of people and their relationships, their families, which is a very different way to connect than men connect, I would contend. And for me, but I've been in the business a really long time, it pays off in dividends, because there are relationships I've had for 35 years, and then when Berkshire's looking for help in one thing or another, there are tons of people to go to, whether it's for deal flow, for information, for expert advice. But it's building it over the years and building it in a different way, and in many ways a way more authentic way. So it pays more dividends in the end. But that would be my advice.
So I'm mindful that the great Cheryl is coming. I know no one has read the book or talked about it, so But if you had one last word of commentary or advice, what would it be, Cammie?
Okay, cold call the woman with 3 hours of sleep.
It's a meritocracy, pal.
I think there's a lot to this notion of finding your unique way to connect with people. That mentor that I talked about, I originally tried to mimic his style, and he kind of is a coach of his CEOs, for instance, of the CEOs, the boards he's on. And it felt completely inauthentic, and no one was willing to take a 28-year-old woman and have her be their coach. So I decided that I was going to be the confidant, and that was going to be my shtick. And really, ultimately, as a venture capitalist, you want, for instance, your portfolio company CEOs to call you first. And confidant turned out to be the shtick that worked. And so I have found that being the sounding board, so to speak, works with other male VCs or my CEOs or so on. And so, again, just embracing what's positive about being a woman as opposed to trying to be a man has what's worked for me.
I guess my advice would be to have your own board of advisors. So people, a diverse group that you trust, that you can call on either for personal reasons or business reasons, or in my case, just to do a sanity check. It will serve you in so many different ways.
Jane?
I think this might be a line from Sheryl Sandberg's book, Be Your Authentic Self. I think she said maybe someday we will all be able to be our authentic selves. I read that and said, well, why not right now? I think, Claudia said to me when she came in, you said when I started working for you at Bain, you ask questions. That's really good. You stand out because you ask questions, and a lot of the guys won't. So I think that, we do ourselves somewhat of a disservice when we try and be something that we think we're supposed to be in the workplace, or model after the guy with the marathon running first thing in the morning, no kids, playing golf in the evening. I think we do a much better job of our jobs and ourselves when we're our authentic self, and there's a huge amount of strength there.
And I don't probably need to say this to this group, but it's what I would say to young people is it is all about the people. And every career choice, I've only made 2 post-business school, have been 100% about the people, 0 to do with the business. 0. I knew nothing about private equity. I really liked the people I met, and I knew nothing about strategy consulting, and I knew nothing, I found people that I really meshed well with, and that's certainly what I tell my kids. It's hard to see that from the outside in, but it's really worth surrounding yourself with family, a new family.
So thank you all for sharing your thoughts. Thank you all for being here.